with the respect of, tackling the F&O volumes with STT that's been introduced in the budget. Do you think the government did this to, curb the excessive speculation that was on in the F&O space?
So, I mean, I think clearly that was one of the thought processes that has gone by. Uh, and it needs to be seen how that works. Uh, I don't, clearly, I mean, this increase in STT will impact the high frequency shops that exist, which run automated trading strategies. Okay. But whether it's going to deter the retail investor from, participating is something that needs to be seen. I think to sort of get the retail interest down, I think you will need a lot other measures, such as, for example, maybe increasing the lot size value for the in the FNO segment, and also maybe access to capital or increasing margin requirements. I think those will be the measures, but that will does not necessarily have to come in the budget. That is something which normally the exchanges or SEBI will come up with going ahead.
Mr. Raheja, the other argument on this side is that some sections of the market needed a bit of discipline and prudence. Somehow, the generation that is sub 25 and between 18 and 19 refuses to understand the kind of basic financial uh, education that is necessary, on which the three of us grew up with and that got into markets. So is this a kind of a disciplinary phase that the government is trying to put financial markets through?
I don't think increasing STT is going to do that for the category of investors that you're talking about. Because they very often the realization of this STT taxes comes to you much later when you see over a period of time. But I think the discipline that you talk of. So look, for the greatest period of time, we've been a country where financial savings has been far lower. I mean, it's been restricted to traditional resources such as real estate, gold, fixed deposits. And equity has only just come into the limelight in a big way over the last 4 years post COVID. A lot of factors have driven that, and that has, basically means that it started with the whole ease with which you could open up your, broking account, link it to a bank account, and start a trading account and do that. And that has got to do with the whole digitalization of the economy that we've seen over the last decade. The second element was the fact that COVID created an opportunity for most people whose traders or shopkeepers whose businesses were shut to be able to start up, do something sitting at home. And anybody who sort of invested during the 2021 phase has actually been in the money. And so from that perspective, he looks at this as an asset class which is very, very profitable. Surely, I think the euphoria that we are seeing in the sector is something that one needs to be cautious of. You will see corrections that happened. I mean, I don't think we are we are in a market cycle where there's not going to be any correction. We don't know when that will happen, but it will surely happen at some stage. And that's the time, some of them will get hit and hurt. And that's a part of learning that happens for any investor in the market. For this generation, they haven't seen it over the last 3, 4 years. Uh, it will happen as a market cycle changes at some point of time. But I think the heartening thing is that what this has also done, let's look at the flip side to this, is that it has made us less reliant on foreign investors and has created this whole domestic flow of money into mutual funds and SIPs. And that's made the markets much more resilient. That's lowered the volatility of markets as far as India is concerned. In the previous 3 decades that I know of, every time we had a global event, we would see big sell-offs, and it was not unnatural to see these sell-offs being in the range of 20 to 25%. And in the last couple of years, we have seen what we call as bull market corrections. So in that sense, it made the markets much more resilient than it was earlier. So it has a positive angle. But clearly, the valuations where they stack up today are of concern, and one sort of needs to be very careful, when you are investing. But the larger point is the whole FNO open interest position that has built up, which is a cause for concern because it's never been at these levels, even in the last decade that I've seen.
Right. So, also wanted to understand, isn't this an instance of how Prime Minister Modi is showing once again that his government really takes tough, unpopular, but necessary decisions?
Well, it's true in that sense, but look, they have taken these sort of decisions in the past also. So I just think the heartening fact is, from the government perspective, the message is very clear. It's, just because it's a coalition government, we haven't seen excessive SOPs or excessive populism take place. It's more of a business-oriented government as such, which looks at how to drive the economy going ahead. Um, the only concern, like I mentioned to you, is from the direct taxpayer group. There has been this frequent changes in rates, and that's sort of not very good if you're looking to widen the tax net.